Hi, I'm Shein Shanin and you're watching the Edge TV Evening Highlights. As widely expected, Bank Negara is keeping its overnight policy rate unchanged. The Central Bank's Monetary Policy Committee met today and decided to maintain the OPR at 3.25%. In a statement issued after the meeting, Bank Negara says overall domestic liquidity conditions remain stable. This is despite the fact that global and domestic developments have continued to affect the ringgit exchange rate and domestic financial markets. The central bank adds that the financial system remains sound with healthy growth in financing. Financial intermediation has therefore continued to support the economy. Bank Negara says at the current level of the OPR, the stance of the monetary policy remains accommodative and supportive of economic activity. It recognizes that there are heightened risks in the global economic and financial environment, and it is carefully monitoring these risks to assess their implication on macroeconomic stability and the prospects of the country's economy. This is to ensure that the monetary policy stance is consistent with the sustainability of the overall growth prospects. The central bank says it will continue to ensure the orderly functioning of the money and foreign exchange markets. The boardroom tussle in Wintoni Group Berhad is set to get uglier as shareholders are displeased with the conduct of the EGM today. The flustered shareholders have decided to stay put to vote, although Chairman Datuk Sri Muhammad Sharif Omar ended the meeting. The newly appointed chairman declared that all resolutions were academic, as 8 directors resigned yesterday.
Right now, I think the company is expecting to be engaged in maybe court proceedings because there was a bunch of very angry shareholders just now.
Stated in the resolution, the 8 directors were those slated to be removed in the EGM today. Describing those who called for the AGM as bulldozing the board, Mark says the group should do the right thing as they are holding more than 40% of Wintoni shares.
It's not legal action, it's something for the benefit of all shareholders. If you hold that much voting power, you should be doing the right thing. And the right thing is stated in those 2 documents, the Takeover Code and the Capital Markets and Services Act. They want to control the company. It's already stated in the notice of meeting. They want to remove the board and they want to put their directors in.
Anita Chu Cheng Im, Datuk Haji Jalaluddin Hussein and Chang Kok Fai were among the newly appointed directors. Executive Directors Datuk Teh Po Yi was among the 8 who resigned from the board yesterday. 1MDB has shortlisted and approved 4 companies as potential development partners in the Bandar Malaysia project. That's according to C.H. Williams Talhar and Wong, or WTW. WTW is the transaction advisor for the Bandar Malaysia Request for Proposal, or RFP. WTW's Deputy Managing Director, Danny Yeo, says WTW is working to finalise Bandar Malaysia's development partners by the end of October. And it aims to execute definitive legal agreements latest by the end of November 2015. The 4 preferred bidders were shortlisted from the 12 proposals submitted at closing date of the RFP on 28 August 2015. The proposals for the 486-acre project came from domestic private developers, GLCs and foreign parties. The 4 bidders will undergo a detailed due diligence, clarification and negotiation process with 1MDB Real Estate and WTW before a final recommendation is made to the 1MDB Board of Directors. The commercialization of Bandar Malaysia is part of 1MDB's rationalisation plan as presented to the Cabinet on 29 May 2015. The commercial real estate segment is getting smoked as fewer Malaysians set up shop amid a sluggish economy. The Real Estate and Housing Developers Association, or REDA, says commercial property launches shrunk by 52% in the first half of 2015. Trying times for the property sector. According to REDA, property players are more upbeat on home buyers, with the number of residential units launched more than doubling in the first 6 months of the year to 10,550. But it's a different scenario when it comes to the commercial side. Only 327 commercial units were launched in the same period, compared with 675 in the second half of 2014. And the 300 over units launched, only half, or 155 units, were snapped up.
That means lesser people are starting their own businesses and lesser rental the demand for rental market is not as strong as it was before. That's why developers think that there is a lesser demand for shop and commercial units.
Among the major factors affecting the cost of doing business is the rollout of the GST. Also making things harder for the businesses, the 70% loan-to-value ratio, the banning of the developer interest-bearing scheme, and the high real property gains tax. And that brings the Edge TV evening highlights to a close. I'm Shein Shanin. Thanks for watching.